The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, it has no doubt been an interesting week in the markets, and we're only halfway done. Of course, a lot of talk about U.S.-China trade and optimism ahead of the meeting between President Trump and President Xi. China reportedly stepping in to make a few U.S. soybean purchases ahead of that meeting. A lot to talk about here regarding that news and across the rest of the ag markets. Joining us here today, Mike Zuzolo with Global Commodity Analytics. Mike, always good to talk with you, my friend. And I know we got a lot of ground to cover here today. I'll just start with this. Obviously, the U.S.-China news is the big piece that everyone's talking about here this week. Reuters reporting early Wednesday, that China bought 3 cargoes of U.S. beans for December-Jan delivery. I'll eat my crow. I've said on this channel before many times and in columns that I said China wasn't coming back. Now, I did have in that caveat that they're not coming back in a meaningful way. I don't know if these 3 cargoes could be considered meaningful, but nonetheless, I'll eat my crow. I was wrong, and, here we are now waiting to see what comes from this Trump-Xi meeting, Mike. But I know that this has been all the talk here in the markets, at least on the grain side, the last couple of days.
Well, a couple of things on that, Jesse, and it is good to be back with you this week. I think that what we have to remember when we listen to podcasts and video podcasts, especially when you and I do and put forth so much effort on the charts and explaining in visual form a lot of analysis that's high dollar analysis, but is done as a courtesy to you because of what you give to the people that watch. And specifically, if you look at the cattle market, I've taken a lot of heat in several areas of communication, not just your program, about, quote, being bearish, the cattle market. And it's not that. It's just that's what the analysis is suggesting. And some have called me a Trump sympathizer. I'm not a Trump sympathizer. I try and stay apolitical in my analysis. And I think what you do is provide a very valuable source of information, because at the end of the day, it's up to the person that's watching this information to make the final decisions. And to the 3 cargoes, I've heard more than one person say it's very underwhelming that what China did was, and they haven't even confirmed it. It wasn't even until this morning, on Wednesday morning, that the Asian media confirmed that President Trump and President Xi were going to sit down on the sidelines of APEC. That's how opaque and cloudy this whole thing is between the United States and China. And I have read more analysts than just myself, like political foreign policy analysts, that believe sincerely that very little practical material things are going to get done in this meeting. I hope I'm wrong. I really do, because I want prices to go higher for my producer clients. But I think it's a situation where we're in a time period, if you're sitting and watching these kind of videos, remember what we're here for. We're here for information. We're here doing our best. And if you don't like something or disagree with something, pick up the phone or pick up a 2-week trial, and we can talk it out and give a fair viewpoint, instead of, working it from an 18-minute video.
And it's all about education, Mike. That's the last thing I'll say on this. Yes. And I'm with you. I'm apolitical. At least I try to be, and this is, the whole point behind Market Talk as a radio show and a podcast and a video podcast. It's all about education and trying to provide information for folks to make decisions for their operation. That's what it's always been, and that's what it will continue to be, and everything moving forward. So I'll leave it at that. But I do want to stay on the soybean conversation with you and look at some of this analysis. And let's start with Brazil soy exports and talk about what you're seeing here and what this analysis is all kind of showing you ahead of this meeting between Trump and Xi.
Yeah, this is a really nice chart that the American Soybean Association put out. I believe it was last week, and it really shows nicely where Brazil is at, where they've been ever since 2020 in terms of their seasonality, their monthly exports into China. And we see that the month of March, specifically in the green line for this past March, was a new record going back the last 5 years. And we see the 2 months prior to that, January and February, how they ship next to nothing to China traditionally. I am of the camp and have been of the camp that, yes, we're going to pick up some business, but is it going to be because of the trade deal, or is it going to be because of this chart right here and the idea that seasonally Brazil's pretty much out anyway? And I'm part of the latter mindset that we will pick up some business, but it won't be, I think, meaningful. I don't think it will get us back to 9.5 million tons a month. If you want to say I'm wrong about something, that would be the number to keep an eye on, because what I'm hearing right now is you got the 3 loads that are reportedly sold. The trade is thinking you're going to get about 5 million tons in the month of Dec, maybe another 5 million tons in the month of January. But that's about half of what the Chinese have been buying. They've been buying around 9.5 million tons a month. And then all of a sudden you get past January and February, and March comes around. And without a weather market, I think it's more likely that China will continue to buy Brazilian beans. Maybe President Trump can work some magic and change that. I sure hope so. But I think the reason that I wanted to really stay close with the physical sales and shipments of U.S. beans to China is because of the fact that we do have a big oversupply in the northern plains. And it's really important to keep an eye on that, because we're not out of the woods yet of having an oversupply globally. In fact, we're still sitting at the 3rd or 4th largest stocks to use ratios globally, if I remember right, in the last 20 years. And so you get a weather event in Brazil, then we can start talking about March and April and May getting a lot more business in a chart like this.
And I know soybean futures on Wednesday kind of took a breather on the recent rally. We were pretty much mixed right around unchanged. Now we look at the weekly soybean continuation chart. What stands out to you? Obviously, I could see here just with the rally in the last couple of days, kind of breaking out of that wedge pattern a little bit.
Yeah, exactly. Breaking out a little bit early of the wedge pattern. I'm not going to get upset about that. What I will say is that the key now is that long, flat, horizontal blue dotted line. That's about the 1075 level in lead month futures. We haven't seen a weekly close above that level going all the way back to the July-August time period of 2024. And with the Wednesday trade, seeing the pullback early and then coming back around with more of a risk-on sentiment. We had a new record high in the stock market before the Fed talked. We had new record highs in copper early on Wednesday before the Fed talked. And I think those risk-on mindset sentiments spilled over into the crops. The soybean oil went from negative to positive thanks to another new weekly high in the crude oil market. This is a chart that would suggest to me if we can close weekly and monthly above 1075 and even get above 1080, that would probably present some good fundamental and fund-led sentiment in this market. And I like this chart, especially, Jesse, in the aftermath of the Federal Reserve reporting their 25% or 25 quarter basis point, 0.25% cut on the rates. But Chairman Powell was starting to talk as you and I started to tape this, and he was essentially saying, don't think that it's an automatic that we're going to give more rate cuts this year. That sent the stock market lower as we talked. It sent the U.S. dollar sharply higher as we were talking. And so I like this chart and the charts we're going to look at today in general a lot more than I did 2 hours ago, because there's more pressure now on the commodities and the stock market to perform, because Fed chairman is essentially underwhelming the monetary policy at this stage of the game.
No, that's an excellent point. A lot of facets to take a look at with all of this. Mike, I want to ask you about the corn soy spread action here. Dec corn, Nove soybeans. Obviously, with the rally, beans have been the talk. Corn's seemed like a reluctant follower to me a little bit here. I mean, what are you seeing when you start to look at this spread action?
Yeah, this seems to me in this chart, we've seen a divergence in the sentiment here, and you hit it on the nose. The beans are, parabolically going higher. They're like a rocket ship going higher now in the last several days, and we gapped higher in the November beans, and that 1052 area is a really key level to be watching because that's kind of where our low was from Sunday night's trade. But then you have a gap below that, and I think that's where you really want to be watching for any kind of sell signals that we may go back down and fill that gap, which now is pretty far away from the current prices. You're talking about 30, 40 cents away. Corn just looks like a very stable, strong piece of property, essentially, when it comes to the chart price action. Doesn't mean corn can't correct. What I'll be looking at here specifically on this chart, Jesse, is Tuesday's highs. Those were the days that we made those big moves up, and then we fell back going into the close. That 436 and a quarter level in D's corn, 1091 and a half level in November beans, 535 level in the December soft red wheat. These are levels I would love to be able to take out as we closed out the week and kind of put more cushion behind us as far as not getting into too much of a cut up market and one that wants to go down and test support levels.
We're having a conversation today with Mike Zuzolo from Global Commodity Analytics. Let's talk the wheat market a little bit here. That's also been something I'd say wheat's been in between beans and corn. It just, as I've looked at it anyway, with some of the price action here in the last couple of days. Would you agree? What stands out to you across the wheat trade right now?
I would agree, and I think it's been an excellent leading indicator along with the crude oil of what really opened up the upside in the soybean complex and in the corn complex. And why was that? It was because of, I think, the U.S. sanctions on Russian oil. Russia then turned and raised their export quota price. And then we saw the good news coming out of Asia, Malaysia, Indonesia, Vietnam. These are heavy biofuel countries potentially, and they're heavy meat countries as well as far as U.S. meat export potential, Jesse. And so I will stay with what we've talked about for the last several weeks. Wheat and crude oil really need to be underneath us, especially with the dollar rallying and with what the Federal Reserve, depending on how we shake out on Wednesday's close and Thursday's trade. But what got us to this price level in soybeans, in my opinion, when it was all said and done, was a turn in the wheat and support from the corn.
Crude oil's been fairly quiet here as of late. Let's look at that WTI correlation with SRW wheat here. And this chart, still, we've looked at this many times, seems like it's, for the most part, kind of staying steady on the trend that we've been seeing.
Yeah, it's looking a little shaky at this point as we got to midweek. Instead of being at 85, almost 90% positive relationship over the last 5 weeks, we've dropped that back down to below plus 60%. This is a kind of a yellow flag using a kind of an Indy 500 racing term. This is kind of a yellow flag moment for this price action between the wheat and the crude oil. We got up to above $61, I believe it was, on Wednesday's trade for lead month crude for December futures. The monthly high is 62.92. Here again, this is a very big number for me. If we could plow through 62.92 as we closed out Friday's trade, being the end of the month, that I think would really support this market quite a bit. But what I'm nervous about in this chart is that the crude oil market could wobble on us because of the stronger dollar, and that the wheat market wants to follow the crude more than some of its own fundamentals. So it's a crucial time period for these two assets. I've talked to clients about hedging more, getting more 25 beans done, starting some more 26 corn, getting into more 25 corn as well. And I've talked to them very sincerely and said, we're at price levels I don't want to let slip away here, whether you're looking at 25 or 26 on the row crops. But if the wheat and the crude can keep performing in the right way, rather than I'll leave it alone and not hedge. But if I see this give way, I'll probably get some hedges in place.
Let's talk livestock. Cattle futures saw a fairly sizable rebound on Wednesday. Obviously, just immense volatility with expanded limits in feeders for several days and things of that nature. Hogs were a little lower, and this is a cool chart to look at here, looking at no feeders, Dees live cattle, and Dees hogs. Talk about this chart and explain what you're tracking here, Mike.
The cattle have saved the feeder cattle market, which is really healthy in my opinion, because the cattle market going into the end of the month here have really woken up to the idea that, hey, we got some cash fundamentals out here that are supporting this market, and we don't need to be going lower with the feeders any longer. That's how I read it. Throw on top of that, Wednesday, we finally heard from the Mexican ag minister, and he said a couple important things. He said, yeah, we don't really have an open border yet policy. We don't have anything going with the U.S. as far as opening the border. And also, we've got to make about 100 million flies a week to be able to get the disease pressure down enough that the U.S. is going to open the border. And that's going to take some time still. I think the feeders came around on this, but it really was, I think in my mind, Jesse, coming around on the fat cattle saying, no, we're done going down at this point, and we've got a month end coming, and we've got some cash support here. So what we want now is a couple, 3 days of consistent moves back in terms of a recovery, fill gaps that we had created in some of these charts from the beginning of the week's trade, but don't stop there. Continue to build upon this support, and let's keep this cash market going in the fat cattle market especially.
Well, to your point, thinking about this cash trade, I've been waiting to really see what that's going to look like here this week. And I know there's been some scattered business out there already. Everything going on with this, especially with these feeders, a lot of talk I've heard of, well, maybe it's been fund managers getting out, and maybe some weak longs getting pushed out of this market. Now maybe we'll get the correction here. I mean, there's so many dynamics going on here, Mike, but I think a lot of this is going to come back to, at least for me, looking at this cash market as we close out the month.
I think so too. And I think, Jesse, you brought up a huge point about the funds. I think the feeders really have been playing with the strengthening corn market and the strengthening grain market. The funds have been really unwrapping that spread. And I don't think that they just don't absolutely care about what prices they get at. But this is a mechanical trading system that they're running, an algorithmic trading system that they typically run. And so if corn's gone up, they'll dump a certain amount of feeders just because of the corn gains. And on that note, I do think that the margin call pressure probably peaked, I would guess, on Tuesday. Especially given the fat cattle turning around, you probably chased out as many longs as you're probably going to chase out at this point. And so the threat of margin calls forcing small speculators out, probably a lot more diminished. This should all help underpin the cattle market. I would say the one thing that I will continue to watch that could cause us to resume the downside is what we talked about last week. And that is the idea that President Trump is working hard, like he did with egg prices, to get down retail beef prices. I have heard that he is being really challenged heavily, though, in Washington, and it's essentially being explained this is not probably going to work because you're probably going to kill wholesale prices, producer prices, but you're not going to get retail prices down much. If that's the case, let's be watching to see what he does with Brazil as he goes into talks. When he comes back from the APEC conference, he's expected to probably sit down with Lula from Brazil. Let's see if we open up our beef market or not. That would be probably one indication that the egg analogy or the egg example is still in play, and it could still keep some downside in the market.
Mike, anything final you would have or want to reiterate for folks here on the show today?
No, as I said in the beginning, one of the comments last week specifically was about first you say China's not going to buy, then you say they are, you're lost. Those kind of things. Call me and I'll talk it through with you. I don't think China's going to buy as a trade negotiating tool. I think they're going to buy seasonally. Maybe I should have said it more clearly, but that's what communication's all about. And I know it's a high octane life we're leading right now and a lot of stress, but we are on your side.
Globalcom with 2Ms research.com. You can find Mike's toll-free number and information there as well. And we appreciate everything you do as well, Mike, and all the time you supply for me and the show here each and every week and all the analysis. And as always, thank you again. We'll let you go. Have a great rest of the week. We'll talk to you next week.
Thanks for having me, Jesse. It's great to be with you every week.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.